Paying for college in the United States has never been more expensive. Tuition keeps rising, living costs keep climbing, and for millions of students, federal financial aid simply isn't enough. So what happens when scholarships, grant savings, and federal loans still leave a gap? That's when many students start considering private student loans. But there's one big problem. Most lenders want a cosigner. And not everyone has one. If you're an independent student, an older learner, an international student, or someone without family financial support, finding a qualified cosigner can be nearly impossible. The good news: private student loans without a cosigner do exist. The challenge is knowing how they work, who qualifies, and which lenders actually offer them. In this complete 2026 guide, we'll break everything down in simple terms so you can make a smart, confident borrowing decision. What are no-cosigner private loans? A private student loan without a cosigner is exactly what it sounds like. It's a loan issued by a private lender, like a bank or online lending company, where you alone are responsible for approval and repayment. Normally, lenders prefer borrowers who already have a solid credit history, stable income, a strong credit score, usually around 670 or higher. Since most students don't have those yet, lenders usually ask for a cosigner, typically a parent or guardian. That cosigner acts as a financial safety net for the lender. But when you apply without one, the lender evaluates only you. They look at your credit score, your income, your debt-to-income ratio, employment stability, your school and major. If you meet their standards, you can qualify completely on your own. Federal versus private loans. Before you even think about private loans, you should always complete the FAFSA and explore federal options first. Federal student loans usually come with major advantages: fixed interest rates, income-driven repayment plans, loan forgiveness programs, deferment and hardship protections. Private loans, on the other hand, typically require credit checks, offer fewer protections, may have variable rates, don't qualify for federal forgiveness programs. Private loans should be used only after you've exhausted federal aid. Think of them as a backup tool, not your first option. Best private loan lenders without cosigners. Let's go over some of the major lenders in 2026 that are known for offering student loans without requiring a cosigner for qualified applicants. 1. Ascent, best for limited credit. Ascent is one of the most well-known lenders, offering options specifically designed for students without established credit. They even offer something called an outcomes-based loan, which evaluates your future earning potential instead of your credit history. They consider your school, your major, your GPA, graduation likelihood. Students who are juniors or seniors, especially in fields like STEM, healthcare, or business, often have the best approval odds. 2. Funding you, best for no credit history. Funding you takes a different approach. Instead of focusing heavily on credit scores, they evaluate academic performance, school quality, major, future earning potential. They offer fixed rates only, no cosigner requirement, loans for undergraduates. The only limitation is that they're not available in every state. 3. College Avenue, best for strong credit. College Avenue allows solo applications, but approval is more traditional. They look closely at credit score, income, employment history. Borrowers with scores around 680 or higher tend to qualify more easily. They also offer flexible repayment plans, including deferred payments, interest-only payments, full payments. Plus, they provide auto-pay discounts. For Sallie Mae, best for strong income. Sallie Mae is one of the largest private student loan lenders in the United States. While many borrowers use cosigners, you can still qualify solo if you have strong credit, reliable income. They offer fixed and variable rates, multi-year approval options, no origination fees. 5. Citizens Bank, Best for existing customers. Citizens Bank also provides student loans without cosigners for borrowers who meet credit and income standards. If you already bank with them, you may qualify for loyalty discounts and reduced interest rates. Interest rates in 2026. Private loan interest rates vary widely depending on credit score, income, school, degree program, loan term, market conditions. Typical ranges in 2026 look like this. Fixed rates about 4.5% to 14%. Variable rates about 5% to 15%. If you apply without a cosigner, expect your rate to land toward the higher end unless your credit profile is excellent. Requirements to qualify solo. Most lenders require borrowers to meet certain baseline criteria. U.S. citizen or permanent resident. Enrolled at least half-time. Meeting academic progress standards. Credit score typically above 670. Proof of income or employment. Older students or working professionals returning to school often have higher approval odds because they already have income and credit history. How to improve your approval chances. If you want to qualify without a cosigner, preparation is key. Here's how to increase your chances. First, build your credit score. Pay every bill on time, keep credit utilization below 30%, avoid unnecessary credit checks, and always dispute errors on your credit report. Second, stabilize your income. Lenders like to see consistent earnings. Even part-time work helps. The more predictable your income looks, the safer you appear to lenders. Third, apply later in your academic career. Upperclassmen often get approved more easily because they're closer to graduating, meaning lenders expect repayment sooner. Fourth, choose a strong earning major. Degrees in engineering, nursing, computer science, or business tend to improve approval odds because lenders consider your future salary potential. What if you're denied? If you get rejected, don't panic, you still have options. You could reapply later with a cosigner. Even if you don't have one now, you might find someone willing after explaining the terms. You could also build your credit for 6 to 12 months. A secured credit card with small purchases paid off monthly can dramatically improve your score. Another option is an income share agreement or ISA. Instead of borrowing money, you agree to pay a percentage of your future income for a set period after graduation. And finally, consider working while studying. Part-time jobs, freelancing, or online income streams can reduce how much you need to borrow in the first place. Pros and cons. Let's quickly weigh the advantages and disadvantages. Pros. You gain full financial independence. No risk to family members. And you build your own credit history. Cons. Interest rates are usually higher. Approval standards are stricter. And private loans offer fewer protections than federal loans. Repayment strategies. If you borrow without a cosigner, repayment discipline becomes extremely important. Try paying interest while you're still in school. This prevents your balance from growing. Use autopay whenever possible. Many lenders give rate discounts for automatic payments. After graduation, consider refinancing. Once your income increases and your credit improves, you may qualify for lower rates. And whenever possible, pay more than the minimum. Extra payments go directly toward your principal balance and reduce long-term interest. Should you take one? Before signing any loan agreement, ask yourself these questions. Have I maximized federal aid? Have I applied for scholarships? Is my expected salary high enough to handle repayment? Am I borrowing only what I truly need? Private loans are a financial tool, not free money. Borrow conservatively and think long-term. Special note for grad students. Graduate students often qualify more easily for private loans without cosigners because they may already have work experience, income history, stronger credit. Graduate degrees also tend to lead to higher salaries, which lowers lender risk. Fields like healthcare, law, technology, and business usually see better approval outcomes. Final takeaway. Private student loans without a cosigner are absolutely possible in 2026. But they require preparation, research, and smart financial planning. To maximize approval odds. Build credit early. Maintain income stability. Compare multiple lenders. Borrow only what you truly need. Student debt can either accelerate your future or hold you back for decades. The difference comes down to informed decisions. Choose wisely. Disclaimer: this content is for educational and informational purposes only and should not be considered financial, legal, or lending advice. Loan terms, interest rates, eligibility requirements, and lender policies may change at any time. Always verify details directly with lenders before applying and carefully evaluate your financial situation before borrowing.